Have you noticed that the S&P 500 isn't the S&P 500 anymore? Instead, it's more like the S&P 5 as just 5 companies. Facebook, Amazon, Apple, Microsoft, and Google now account for a record 23% of the S&P's market capitalization. This is measurably higher than the concentration during the peak of the dot-com bubble, when Microsoft, Cisco, General Electric, Intel, and Walmart made up 18% of the S&P. If you've noticed that, then it won't come as a surprise that, according to Bank of America, just 10 S&P stocks accounted for more than half of the market's 7.2% return in August. So, with only 10 shares left, you better know where you're going to be when the music finally stops. And so to continue what we were talking about in the last video, we're looking here at the 20-year monthly chart on the SPY, the spiders, and the close on Friday was 334.06. Now from that bottom here, we've come all the way up here to about, say, 350, and we have come off of that in the last week or so, down to this point here. We have eclipsed that previous high, at least in the price chart, but the oscillators aren't so favorable. Let's move into those. Here into the volume, definitely volume has declined fairly steeply, and that's not necessarily a good sign. Here into the MAC, we've got these previous highs there in early 2018, mid 2018, late 2019, early 2020, and the current level here, which will probably see some sort of move on down given the last week or two. But for the most part, we've got a very slight trend down. And that's not a good divergence to have when you have a market going up. Now, it is acceptable, but it isn't necessarily favorable. Moving here into the histogram, pretty much the same thing. And into the price rate of change, this looks okay. We did reach that level there, which eclipsed this, which is good, but we are coming off pretty sharply down here. Moving here into the relative strength, I've talked about this a number of times. This is probably the biggest concern that I have. From that point there to here, and then now here, definitely a downward trend. So we need to see where this goes after this latest downward move. Is it going to stop and turn back up? If so, we need it to move above this trend line. And then we need to get it above some of these previous highs. And that could be hard, especially since this particular move that we're in seems to be hitting the exhaustion point. Moving down here into the stochastics, much the same. You can take a look at this and you can take a look and see a nice move all the way there. That's a big long-term topping process. Into the Williams, pretty much the same thing. You can either draw something here like that, or longer you can go like that. But either is not necessarily good. So moving on up here, back to the price chart, we need the price to stop moving down, head back up, and if it produces a double top, that's another concern. We need it to continue moving on up above this previous high. But as well, we need some of these oscillators to move up too, beyond this trend line on the way up. We need to get into that overbought territory to be safe. And right now, the position we're in is a number of these oscillators are unfavorable. I'm not going to say they're absolutely negative, but they definitely are unfavorable. So right now is time to be cautious. Don't be spending any money. Stack the cash. Save for the opportunity that will come. And for today, that's ChewDog Charts. Thank you.